Hey guys, what's up? Hope you guys are having a great day today. My name is Matthew Spositi. I want to apologize because, well, to be completely fair with you, I didn't actually record a video yesterday, largely because I was having a lot of technical difficulties, and I had a lot of family stuff going on over the weekends. You know, we had planned to go see the in-laws, and, you know, my daughter's crawling and everything, so of course all the grandparents want to go see her and everything. So, you know, pairing that on top of the idea that I just couldn't get the settings right on the camera. This Sony a6400 that I have is very, very nice camera, if I'm completely honest. I really enjoy it. But one of the issues I have with it is just, it's so freaking complicated. I mean, I'll show you the camera that I'm used to working with. It's basically this. All right? Little camcorder. Canon Vixia. That's the Canon Vixia HF R800. That's what I'm used to working with. And in all honesty, it's really easy to work with. It's not that difficult, but you have some quality issues as a result of the ease of use. The Sony a6400 certainly offers a better image and a much better camera, but it's so much more complicated than what I'm personally used to using. So it was a bit of a learning curve. So instead of actually recording a video for you guys yesterday, I decided to take the entire week to actually look up some courses and actually research how to use the Sony a6400. So as a result of that, you know, I didn't end up recording anything, but I learned how to use the camera and I got the camera all set up, so hopefully it turns out great for you guys. That said, today we have tons of currency pairs, a lot of different trades to go over. I'm not going to go over all of them. I'm just going to cover two, and I'm going to walk you through my analysis of what I went through, how I analyzed the markets, you know, how I decided where to put my stop loss, my target, my entry, you know, the normal stuff that I typically go over in these episodes, this weekly market analysis stuff. So let's go ahead and jump into it. All right, so the two different currency pairs that I'm going to cover today are the pound dollar and the CAD yen. And the main reason I'm going to cover those is because they both had, well, first and foremost, they were both winners. And I like to show winners, although naturally I also like to show losers, so we could go ahead and show some losers as well. But for, you know, outside of that, I just found them to be overall interesting. I thought they were great trades. I thought they worked out fairly well, and I wanted you guys to see what good trades really look like, what I consider to be good trades. You know, I mean, honestly, a good trade is really just you coming into the market and taking your trade regardless of the outcome. As long as you've back tested it, as long as you've verified the back testing, that's what a good trade really is. It doesn't matter whether you win or lose, that defines a good trade. But in all honesty, guys, what I define as a good winner or a good trade or a bad trade really has more to do with whether I followed my trading strategy or not. You see, you spend all this time creating your trading strategies or your trading systems if you're into automated trading, algo trading and stuff like that. But you spend all this time creating the strategy, you create the system, and then you turn around, and if you were to violate those rules, whether you win or lose is irrelevant. Because you spend all this time creating it, then you spend all this time backtesting it to make sure you have a positive expectancy over a large amount of data. You want to be true to your strategy, assuming that it has a positive expectancy. You built up a belief system in it, so it's a really positive thing to make sure that you are sticking to the strategy regardless of how it's performing. So that said, though, one of the unique things that I do as a trader, and not all traders do this, is I don't classify it as a positive or negative trade based off of whether it's a winner or loser. How I honestly classify it is whether or not I followed my trading strategy. And that's how I classify trades. If I follow my trading strategy, regardless of the outcome, it is a successful trade. And this helps you get in the mindset that it's not so much about your ROI, your return on investment. It's not so much about your risk to reward ratio or how much money you're making or how much money you're losing. I mean, obviously, yes, you need to be making more money than what you're losing, but it's more about following that trading strategy. You created the strategy, you back tested the strategy, now you need to follow it. And that's the most important thing, more so than anything else, because I could give you the most profitable trading strategy in the world. It wouldn't matter because you don't have a belief in it. So it wouldn't matter what that strategy looked like, you would still lose money with it because you would start to go through a drawdown, as all strategies do, and then you would start to effectively say, you know, I don't really like this, you know, I'm going to go ahead and start tweaking the rules a little bit, and before you know it, you know, the strategy is no longer successful anymore. So guys, it's incredibly important that you follow the strategy, but don't follow just any strategy. Make sure that you only follow a strategy that you have created yourself. Even if someone else created it, write down the rules for it and then back test it. If you've back tested it and forward tested it, then you're good to go. And then you should be trading that strategy to a T every single time. So it's important to keep that in mind. So let's go ahead and jump into the charts. All right, so first and foremost, we're going to go over the CAD Swiss. Now, I actually had the CAD Swiss drawn in here. The main reason that it's not drawn in right now is because I decided that I wanted to draw it in while you guys were actually watching it, okay? I wanted you guys to see me draw it in live. Now, the trade already came to fruition, okay? So I've already made money on the trade, a hypothetical money, of course. But I wanted you guys to be able to see what it was that I'm doing here. I wanted you guys to be able to see how I do it. Okay, a lot of times I come in, I show you trades that are already taken and whatnot, and I just wanted you to be able to see and to be able to understand what exactly I do. So here we go. Well, first and foremost, before we could do this, let's go ahead and go back here a little bit so that you guys get to see what it is that I was looking at, all right? And it's going to be a little difficult because I'm kind of zoomed in here. But so here, down here, as you can see, we have this really big spike all the way down here. Now, what ends up happening with this really big spike is that finally we ended up rallying. And we kind of top out right here. As you can see, we got these big, long wicks. And we kind of come down. All right, that said, though, first, so we had this low here, the initial low, the initial high. We had an outside return or a retracement. You could call it one way or the other. So we retrace. We kind of chop sideways after making this low or reaching this lowest point, but we don't actually close below. And we don't actually close lower. But then we come over here, we kind of chop sideways, and then we start to close a little higher up here. This was probably the lowest point that we actually closed, not violating structure. Remember, always, look left, structure leaves clues. We come up here, we got rejected. Why did we get rejected? If you look left, structure leaves clues. We got this area right here that got rejected previously. We also have this area that also got rejected when it was trying to retrace. So then we came down and we stair-stepped our way down, and then we got rejected again, found support right here. And if we zoom out even more, no, there really isn't anything off to the left there. So, if we zoomed out more, we didn't really see anything, but we saw this. This was the support level. We bounced off this, and then we made a new higher high, higher close. So then we retraced again, keep walking through. We kind of came down even further, all the way down here. This would have been a perfect, a very good 618 fib retracement. Let's draw this in. In fact, I think I did take this trade. Yeah, I would have gotten involved right there. I think I actually did end up taking this trade. I take so many trades all the time. It's really hard. It's really hard to remember what I took and what I didn't take. All right, so there we go. We got that. Oh, and then we rallied again. And then we retraced again. Again, another great trading opportunity. Rallied again. We got rejected. Of course, naturally. Then we kind of just went sideways. So there you have it. That is pretty much what I was looking at and whatnot. So that said, though, you can kind of see the idea. I'm waiting for a break of structure, and then I'm waiting for a retracement, and then I'm going to wait for another break of structure. So what do we need in order to identify a trend? We need a 3-point move. Let's go ahead and cover this real quick. We need an initial low, followed an initial high. Then we need a retracement or an outside return. You can either one of those terms is accurate. You can use either one. And then we make a new higher high, higher close. Okay, we have a break. We broke structure here. We violated the structure. We made a new higher high, higher close. And that's it. That is what we need in order to identify a trend. All right, we need 1, 2, 3. We need an initial low, initial high, outside return or retracement. I typically prefer using retracement, but I know a lot of people use outside return. That's why I say that all the time. And then we have a new higher high, higher close. And that is, ladies and gentlemen, what we have. That's the 3-point move that we need to have a trend. That said, though, here we go. So we have a retracement, and now we made a new higher high, higher close. So what I did was I took my fib retracement tool, and I drew it from the swing low to the swing high. Even though the leg of the move was here, I always choose, because this did not violate and close above the structure, I decided to actually measure here because it was a higher point, just in case you're wondering. So I placed my entry right here. All right. Now let's assume that, now, first and foremost, the reason I didn't take this trade here was because I missed it, okay? I wasn't actually watching the market on the 20th of August, which was Thursday of last week. I wasn't watching the market on a Thursday. I was spending time with my family. I was recording videos. I was editing videos, doing content stuff, probably trying to research how to use this freaking camera. That is, in essence, what I was trying to do. So, with that said, I went ahead and when I found the trade, I actually found the trade. Let's see. I actually have it here on the other screen. You guys can't see this. I actually found the trade on the 21st. So I found the trade the following Friday, which I usually try to come in on Fridays and stuff and to take trades and whatnot. I usually try to do trading on Tuesday and Fridays. That's normally how I try to work it in my schedule. You know, it's just the way that I try to do it. But that said, we had a retest. But we looked like we were getting rejected. So I was thinking, okay, well, here's what I'll do. Because I found this on the 21st, which was, let's see, around right here, I decided to put a blue line on 21st, 12, I believe. Right there. And after I put it here, I'd said, okay, look, if the market comes up here, if the market comes down, I will get involved the second time. And thankfully, the powers that be, I got a second opportunity and I took it. This actually happens a lot of times with me. A lot of times what you will see is that the market will bounce around the 618 fib retracement level more than once. It doesn't happen all the time, but it does happen. So just because you don't see the market hit your entry right away, keep watching and see if you can get an entry later on. So maybe put your entry on, put a stop loss on, assuming you got entered. You can do this automatically with your broker. Hey, if I get involved, here's a stop loss, here's a target, whatever. And kind of go from there and just see what happens. I mean, hey, you got your entry, you got your stop loss, so you've protected yourself in a way. So just, kind of go from there. So that's it, here we are. And we ended up coming down here. We got involved. Once we got involved, I placed my target at the highest closed, or the highest body of the candlestick, which was right here at 69.28. And then I placed my stop loss 10 pips below the low, so 68.41. And I placed it 68.31.7. All the way down here. Perfect. Look. So if you guys are looking, if you guys are wondering where I'm getting my numbers from, when I'm actually measuring with my crosshairs, right here, when I'm measuring the different, trying to line it up with the actual tip of the candlestick wicks or the candlestick bodies, one thing that I'm doing is I'm looking far off to the right over here, and you can see my numbers. So that's where I'm getting those numbers from, just in case you were wondering. That said, that's essentially what I did. And I placed my, let's see, this was a long position, so I went ahead and placed I made the long position to cover right here. It can be kind of difficult to actually line it up. I'm a little anal about how I like to line stuff up with regards to my trades. You guys may not be exactly the same way, but I tend to be a little bit like that. I like to have it lined up perfectly. I understand life isn't perfect, but I try to do that. So, and here we are. So we got involved, and now I just basically, I closed out the charts and just came back later throughout the week to see what happened. And, lo and behold, right here, right away, we ended up making money very, very quickly, which was very nice. I love it when the market stops me out or makes me money. I love it when that happens fast. I hate waiting for forever to figure out whether or not I ended up making money or ended up with losing money. I hate doing that, so I love it when I actually can get an answer pretty quickly. And that was it. That was all she wrote, and that's how I analyzed this chart. So I hope you guys enjoyed that one. All right, moving on to the pound dollar. So one thing that I found interesting about this chart was that I actually ended up taking this trade on the 4-hour chart. I normally end up taking these trades on the hourly because that's the time frame that I favor. I really like taking trades on the hourly chart. But one of the main reasons why I decided to take it on the 4-hour was largely because 4-hour trades that get taken on the 4-hour chart and the daily actually get a lot more views on TradingView. Now, even though I take trades on the hourly, if I can bump up the time frame to a 4-hour or a daily, that's what I do because it gets me a little bit more views and things of that nature. So that said, that's what I did on the pound dollar. So here we are. We're at the pound dollar. We have our initial high right here. This is a new higher close. If you kind of look at it, we didn't really have anything down here. So we came up here. We have a new higher close. We retraced. We came back and made a retest of the highs. We got rejected, and then we retraced again, then kind of consolidated sideways, and then we violated this structure level, and we made a new higher close. Now, what does this mean? Once we violate a structure level, what happens? Remember, I've said this many times, and I will always constantly say it to make sure it gets drilled into your head, but if you have, for yourself, if you have a new higher close and you violate structure level and you come back down in, that previous resistance level turns now into support, or at least it can turn into support. It doesn't always turn into support, just to keep that in mind, but it normally turns into support. And that's what we have here. So we came down, we got our 618 fib retracement level, and then we rallied and I ended up making money. And then we ended up getting, our target ended up getting hit on the 21st. So pretty cool. I really, really liked it. It actually worked out really, really well. And it came to fruition very, very quickly, which makes me feel happy because I love trades that are like that. So guys, well, that's going to be it for the episode. I hope you guys enjoyed this episode. If you got value out of it, make sure to hit that like button. Leave me a rating and review on iTunes. And don't forget to subscribe to or follow wherever you are, whether you're on Facebook, Twitter, Pinterest, YouTube, wherever. Make sure to subscribe, make sure to follow, and make sure to give a thumbs up. And hey, do me another favor. If you really, really like these videos, then please consider sharing it. Guys, this message of financial freedom needs to get out to as many people who are willing to listen. It needs to get out to everyone. Everyone we can possibly reach. So if you guys will help me share this message, I would greatly appreciate it. If you guys, hey, chances are if you like it, someone else in your life is going to like it. So, hit the share button. Make sure to get this out on social media. Help me share it on Facebook, Twitter, YouTube, wherever we are. Or wherever you are, make sure to share it. Also, if you like this message, and you really, really want to be part of my personal community, then head over to locals.com. I'll throw the link in the description below. But head over there and join the locals group. It's really great. I post a lot of my content there. I try to post videos from our YouTube channel and then podcast episodes, and then sometimes I'll just type stuff there. It's really in its infancy right now. But guys, get over there, post it. Let me know who you are, introduce yourself and join the community if you want more of what I'm doing. Also, last but certainly not least, I always like to do my affiliate programs last, so I get everything that's in my head out of the way. If you guys are interested in learning how to become a consistently profitable Forex trader, head over to tier1trading.com. Guys, Tier 1 Trading is the #1 trading coaching platform in the world, in my most humble opinion. You got your coaches like Akil Stokes, Jason Greystone, Charles Miles. These guys are absolutely amazing. Charles Miles and me, we talk to this day, and he helps me with my trading. Absolutely one of the best mentors I've ever had. He's a great and amazing guy, and so are Jason Greystone and Akil. They're absolutely amazing, amazing coaches. They genuinely care about their students, and they're going to teach you the art and the skill of trading. And then they're going to teach you not just the trading strategy. One of the worst issues when it comes to trading is that you go out there and you buy a course, you spend all this money, and all they do is they teach you one little strategy. That's not what they do here at Tier 1 Trading. They not only teach you a strategy, they teach you tons of strategy. They teach you pattern recognition. They teach you money management. They teach you structure analysis. They teach you how to read a price chart. And they teach you how to create your own strategies and your own systems so that you can so that you can master the skill and the art of trading. Guys, this is an incredible company. I absolutely love them. I've loved all the education that I've received from them. They're absolutely amazing. They're not going to turn you down the wrong path. So go check out Tier 1 Trading and get access to them. Also, another thing is they give you a really great community for trading too. Once you subscribe to their system, you will have access to all the community members that are there, and it really is a really cool experience to have people that you could go to. Accountability is one of the best things that you can have when you're looking to master a skill. So go check out Tier 1 Trading, guys. You won't be disappointed. That being said, guys, if you're interested in growing a skill but you don't exactly know what skill you want to do, then hey, check out Skillshare. Skillshare is one of the #1 education platforms. It's dirt cheap. It's only like $100 for an entire year. Most of the time, they're going to give you like a month or 2 months for free. They are really, really, really amazing. And there's all kinds of courses from trading, options, trading Forex, investing, personal finances, copywriting. There's also web design. There's courses on how to fly drones. Literally, almost anything you can think of, there are courses for it. So guys, if you're interested in learning a skill and you don't have a lot of money, Skillshare is definitely the way to go. So go check them out. They're absolutely amazing. And last but certainly not least, if you guys are interested in trading, you need a trading platform, right? You need a place where you can go to see charts and stuff of that nature. That's what you need. So guys, go to check out TradingView. TradingView is one of the #1 trading platforms out there. I love it. I use it in all of my videos. I use it each and every single week. If I'm interested in looking at a stock, even though with the time delay, it's not that big of a deal. If I'm interested in looking at Forex, whatever it is, I keep track of prices with TradingView. It's absolutely amazing. It's very intuitive. It's easy to use in my personal opinion. It's one of the easiest to use platforms out there. If you're interested in a trading platform, you can do no worse. Go check out TradingView and get signed up with them. They're absolutely amazing. You will not be disappointed with their product. It really is one of the best systems out there. That being said, guys, hey, like I said previously, that's going to be it for the affiliate program. That's going to be for the whole episode. Hope you guys enjoyed it. Make sure to hit the like button. Make sure to subscribe. And also leave me a rating review on iTunes if you like this content that I'm doing. Guys, if you'll do all that for me, I'll see you guys in the next episode. As always, know the risks, plan accordingly, and have a great day.